Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. It's been a wild week, that's for sure, in the United States and in the financial markets with this Donald Trump election. There's no doubt about that.
Has that changed the face of investing?
Well, I actually do think it's going to make some changes through the financial markets and the U.S. economy. I'm going to explain what I mean. I'm not trying to endorse Trump or say he's bad. I'm just trying to understand what's happening and so I can position my investments accordingly. But there have been some surprising moves in the markets that took me by surprise. Well, I wasn't expecting them. And going into this week, just about everybody was expecting the markets to fall some way or another if he won. Bullish people I know would think it'd be like the Brexit. It'd fall a day or two real hard and have real panic and then who knows what. And I kind of thought, well, maybe it just won't even do much, that the presidents really don't matter, because in the last really just about every election that I've been trading the stock market in back from the 1990s, there hasn't been a dramatic move in the market following an election. Usually the market would just kind of gap up the next day or rally into it a day and then just kind of do whatever, go back down, or just not really do anything unusual. But this time was different, and I think it's telling us a message about what Trump might do as president, favoring different sectors of the economy and abandoning others, perhaps. So the most dramatic thing that happened is the bonds have just dropped. The TLT, which is a long-term bond ETF, it fell almost 5% the day of the election, and it's still going down. Which that indicates that interest rates are going to go up. And I'm someone that has been saying for years the interest rates, the Fed's not really going to raise rates in any meaningful way. And we'd see these predictions on CNBC that they're going to raise rates, the economy's going to boom. And I was always someone who said, well, I don't believe it. Maybe they're going to raise rates one time a year, which seems to be what their plan had been. They raised rates last December. They're going to get ready to do it this December. And those Fed so-called dot plots or whatever were kind of showing this real slow rise in rates for the next couple of years. But this move in the bond market says something different is coming. And it really shocked me. And so I looked at the sectors of the market using software I got, and I saw sectors such as the defense industry, industrial stocks, just soaring. And so are bank stocks, which is kind of the most obvious one. They'll mention that on TV tonight most likely. But the bank stocks, they are going up on enormous volume. Goldman Sachs, you can look at that symbol GS or JP Morgan, JPM as an example. And in the past couple of years, we have seen those stocks, make a new high, and people will say, oh, these stocks can break out and become new market leaders, and that can help lift the stock market up. And the bottom line is one of the things that's been going on for the past 2 years is the market has been in this sideways trading range doing nothing. And during that time, bullish people would say, oh, financials are going to break out, or this sector's going to break out, and the market's about to take off, and it wouldn't happen. And then at the same time, people bearish like me would say, oh, we're in a dead stock market, and eventually this is going to roll over and collapse. We'd get corrections like we had in January or last August, or even recently, the past couple weeks up until this week, and then we would hold support, and we wouldn't, go into a full-blown bear market. We've just been stuck in this range where everyone's looking for a big move, and it just hasn't happened yet. Well, these moves this week in these key sectors, the bank sector, the financial sector, conglomerates, defense, and manufacturing. There's several other sectors, but they're breaking out on enormous volume. If you look at the Dow Transportation Average, it's doing it. That's another critical one, and that tells me that that the big drop in the market I was looking for this year most likely isn't going to happen. I don't think we're in a situation though where we're going to see this broad-based stock market rally. In fact, a lot of stocks that have been popular fad stocks have done poorly since the Trump election. Google, Facebook, Netflix, all down, even down today. Amazon down too. And Amazon's a symptom of what trouble that could come to people invested in the wrong stocks. Amazon owns the Washington Post, which has been a nonstop bullhorn of attacking Donald Trump, and there's rumors that he's going to target them somehow. Some people are saying he's going to use antitrust measures and put the law on him. Now, I don't know, these are rumors. I mean, another possibility is that Amazon has contracts with the Central Intelligence Agency, the government. They could be canceled, given to some other company. But who knows? But the point is, there are going to be things that benefit from Trump, things that don't, and I think the critical thing people in the stock market need to do now is figure out which one, figure that question out, what's going to benefit, what won't, position themselves accordingly. And with the interest rates, I think that's sending us a big message that Trump says he wants to lower taxes. He's got both houses of Congress. He's, I think, certain that that's going to happen. He says he wants to pass a big infrastructure bill, increase defense spending, and I think that's why these sectors are going up in expectation of that. And I do believe he's going to increase defense spending. Even Clinton was proposing to do that. I'm not saying these are things I want to see happen, but these are things that I think are going to happen. And a consequence, though, of reducing taxes, increasing spending is going to be that, like Ronald Reagan, the budget deficit is going to grow. And I think that's why the bonds are dropping and the long-term rates are going up. And that means the Fed will be raising interest rates in December and raising interest rates at a faster rate than anyone has been expecting over the past couple of years. So that's a dramatically different financial market situation than what we've all grown accustomed to, and really taken me by surprise to, connect these dots and think this way, because it's a way I haven't thought at all. And here we are, just one day our world can change overnight.
Well, some people have described Trump's victory as revolutionary because it could bring in some big changes.
Well, I'll put it to you this way. Well, the changes people are seeing or are fearful of are cultural changes. I have lots of liberal friends. I follow various news websites that are conservative and liberal to try to see what the sides are saying. And a lot of people are scared. They say Trump is Hitler, or Trump is going to do stuff to gay people, or crack down on Mexicans and this and that. But I don't know. I kind of don't know if that's really possible. Really, I don't know if he's going to build that wall or these campaign promises. I just know what the financial markets are saying, and that's that he's going to make changes that are going to impact them. And I think the financial market moves are real because they're not just a one-day pop. It's now Thursday. They've been going on for 2 days, and the volume is massive in these sectors. And a story about it is Tuesday night, one of Trump's closest advisors is Carl Icahn, who's a giant conglomerate owner. He has a stock that trades in the stock market. Actually, the symbol is IEP. Pays like a 13% dividend. But Icahn has been a supporter of Trump, and another one, the name's slipping me, but there's another guy like him, and they're proposing this giant infrastructure plan with Trump. But the thing is, Tuesday night, while I was watching the election on TV, apparently Carl Icahn broke away from Trump's election party, went home and bought $1 billion worth of stocks that he thinks are going to benefit from Trump. So I think, figure out what it is that Carl Icahn is thinking, what sectors, he thinks, I believe Carl Icahn thinks his business is going to benefit from Trump and this infrastructure plan, whatever Trump's going to do. And, it might be simple. If someone wants to buy a stock, buy IEP, the Carl Icahn stock. I'm not doing that myself, but I like to invest in ETFs primarily. But, there's ways to benefit from this.
We'll have more with Mike Swanson right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Swanson. Mike, do you think the oil industry is going to benefit from Trump? I know he's pro XL Keystone Pipeline.
Well, I think that's a long-term play, the pipeline. I think oil prices aren't really going to recover anytime soon, regardless of Trump's other plans. There's no doubt he's going to invest, or he'd like to at least, in infrastructure and energy and so forth, but the energy prices, I don't think are going to go up anytime soon, not the price of oil. The reason why is that, you can recall, a couple weeks ago, there was a preliminary meeting of OPEC members in which they pledged to work together to raise oil prices by reducing output. By the November meeting, which is at the very end of this month, that news, when it broke, caused oil prices to spike for a couple of days. But when you read the details of the news, it was just an agreement to have their representatives meet with each other to come up with an agreement. And last week, those meetings went into collapse. Saudi Arabia made accusations against Egypt and Iran over the Syria war, the war in Yemen, and these nations don't, get along on these issues, and the Saudis threatened to increase output and make oil prices actually drop. And I go and look at oil commitment of traders reports, and the commercial hedgers have increased their positions over the past couple of weeks, even increasing it recently as oil went down, and that tells me we're not at the bottom yet, just the combination of all these factors. So I'd like to invest in oil stocks one day, but I don't think it's anytime soon. However, other commodities are going up. Copper is doing really well this week, I think, as part of this that's called a Trump trade. Stocks like Freeport-McMoRan are breaking out on high volume too. So there's things out there that I do think will benefit from Trump's programs immediately. But oil, building more oil companies or investing in that doesn't mean prices are going to go up. So that's kind of what oil stocks need to really do well.
Trump has said he doesn't like confrontation. He likes negotiation. Does that mean warmer relations with Russia and the end of the sanctions that really have cost American and Canadian pork farmers something like $3 billion.
Well, that's a very good question. And the things we've spoken about so far about his economic programs and what these sectors in the market are doing, I'm fairly convinced of this, enough to move my money to bet on him. When it comes to the foreign relations, I do think he will make an attempt to improve relations with Russia. There was a story I saw, I think, on the PBS website, but one of the big news websites saying that there's rumors that Trump would like to make some sort of deal over Syria to try to make a negotiated peace and stop backing the rebels there as part of doing this. The U.S. would stop doing it, which would be a dramatic shift in policy. Clinton would have done the opposite. So that, I do think there is a possibility of major change, but beyond that, I'm really not sure. I think it's going to take, he's kind of very ambiguous, I think, beyond that on U.S. foreign policy. It's hard to tell if he would be more aggressive than Clinton or less aggressive. I think it is clear that he isn't a believer in so-called nation building, but is he more, apt to be more aggressive in actually intervening with some sort of, bombing or violence or whatever? It's hard to say. Clinton never hesitated to give such advice to Obama. If anything, Obama was a restraining influence on U.S. foreign policy that's gone. And the question is, will Trump play the same role I think Obama did? I really don't know that, though. I think it's going to have to take a better look at who he's going to pick as his advisors and what leaks we get. Right now, though, is he's making, or some leaks are coming out, and they tend to be so far leaks to reassure people that there isn't going to be much change. For example, there's a leak today that he's thinking of getting Jamie Dimon of J.P. Morgan to head the Treasury Department. That's a Wall Street guy. He campaigned against such people. So, but if you think back to President Kennedy, when he first got elected, immediately after Election Day, his first two appointments were Allen Dulles of the CIA and J. Edgar Hoover. They were there with Eisenhower, and he carried them over. And then he also appointed the Treasury Secretary Douglas Dillon, which was a Wall Street person. And these three choices were designed to reassure the establishment that even though Kennedy actually himself was a bit of an outsider, he, made some picks to make them happy, and then he started to pick some of his own people that he had a personal preference for. So I would look for Trump to do the same thing, that as these initial first announcements come out, they're really designed to reassure the establishment, the leadership of the Republican Party, that he's willing to, not go crazy. And then we'll see who he picks after that are going to be more his own people. And another rumor today that was on MSNBC is that he's thinking of getting his son-in-law to play a critical role inside the White House, almost like a informal chief of staff. And so that would be, they were saying on TV that would be unprecedented and unusual, but if you go back in history, Dwight Eisenhower had his brother play an informal role similar to that. So it wouldn't be actually out of the ordinary. Of course, John Kennedy had Robert Kennedy, right, as the Attorney General. So he's going to have people close to him that are loyal to him. We were saying before the interview he doesn't have many close friends. Well, he does have his family and his kids. So it's pretty interesting that it seems like a lot of them may be playing important roles around him.
What about his plan not to put all of his holdings into a secret trust, but to have his kids do it?
Yeah, well, that just shows you. I mean, I don't know if that eliminates conflicts of interest, and I don't know really what to think of that, but that's probably what's going to happen. Probably one of his sons or the daughter will be managing the money. The impression I get is that the daughter is almost like the boss of the family or something. under him, and that's why the son-in-law, which is her husband, is going to be, supposedly playing a key role in the White House. But so it does look like he's passing, the businesses down to the children by giving them in charge of trust, which is actually a normal thing, for people that got hundreds of millions or billions of dollars to do. There's a book written by Bill Bonner, I think it's called Family Fortunes, that describes how, if you're a rich family, how to set up your kids and, delegate things to them as time goes on, and so things are passed down and they don't ruin it, and, they handle the resources wisely. And, for whatever people say about Donald Trump and whatever flaws he has, there's no denying that, he's done this sort of thing with his family.
What do you think is going to happen with gold?
Well, I think gold, as we came into this week, gold started a bull market this year. I own gold. I own gold stocks as core positions. But, we saw gold top out around August and have a pullback, which seems to be continuing. We may have bottomed, though, a couple weeks ago. But the key with gold in the mining stocks is they had a huge move already this year. The GDX went up over 100%. Gold went from below 1,200 to like close to 1,400, around 1,370 or so. But when you have a brand new bull market start after years of a bear market, usually the first year brings a massive rally, which is exactly what we've seen. So that's textbook. But after that rally, typically you see a sideways consolidation period that lasts anywhere from 3 to 10 months. So I think that's where we are with gold, that gold is simply consolidating and working off the big move we already had this year. And, if rates do go up in December and there's a realization of the things I'm talking about, which I think I'm an early person to be saying these kind of things about what Trump might do and how rates might go up. But if this becomes, more common, or, that people are thinking this way, then that may be a reason for people to be thinking, oh, gold won't go up, or I should own my gold and, sell it and, keep it down. That doesn't mean it's going to crash or something, but, for a couple months, I think we're just going to stay where we are, have rallies, but, they're not breaking out, and just kind of build a base and a foundation that will ultimately launch the next wave of the bull market, which that second wave after a first wave brings tremendous buying. It's when you'll start to see the junior mining stocks and exploration stocks really take off and shock people by what they do. But I think that's going to be the story for next year, and this is kind of like a pause period, for people who aren't invested to buy or research and figure out what they want to buy and so forth.
Mike, thank you so much for chatting with us.
Thank you. It's great to talk to you, like always.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.